Good evening, everyone. Welcome to today's session, Diversifying your investment into global markets. Any questions you might have, you can type your question on the chat function for Zoom, and I will be able to take Q&A at the end of the session. So this is session overview. What you're going to cover through this session. We're going to start with about Standard Investment Bank. We'll look at introduction to our team, a brief look at our team, the investment solutions and the services that we offer at SIB. And then Nahashon will take over and take us through an introduction to Mansa X and explain how this tool can be used to diversify your portfolio into global markets. So welcome to the webinar. Standard Investment Bank is one of the Kenya's largest indigenous banks, and we've had so many maybe misconceptions about banking. In Kenya, basically, most of us are well versed with commercial banking, but at the corporate level, they basically understand more about investment banks. In the retail segments, we need to demystify what an investment bank is. So basically, you're very conversant with a commercial bank. You get loans from a commercial bank. You do fixed deposit in a commercial bank and things like that. So, but the scope for an investment bank is quite wide, because investment banks underwrite new debts, for example, bonds and securities, equity securities. They also help with selling securities and drive mergers and acquisitions, reorganizations, and broker trades. So the scope for investment banking is quite wide, and what it represents is a very huge opportunity for an investor, be it a retail investor or an institutional investor, to take advantage of the expertise that is packed in investment banks and take advantage of that. So at SIB, Standard Investment Bank, we pride ourselves in being an indigenous bank, fully owned and operated by the Kenyan talent. So a few facts about SIB. We have 850 million worth of shareholders' funds. SIB was licensed by Capital Markets Authority in the year 2005 as an investment bank. The bank was founded actually in 1995 as Standard Stocks, as we are going to look at our milestones, our journey so far. So SIB is a member of the NSE, Nairobi Stock Exchange, and Kenya Association of Stockbrokers and Investment Banks, and an authorized central depository agent for the Central Depository and Central Settlement Corporation, meaning you can come here and open an account for you to be able to buy shares and also sell the same. So our client base is quite huge, and it encompasses government agencies, governments, fund managers, corporations, financial institutions, high net worth individuals, and retail investors. So our spectrum is quite wide, as I pointed earlier, based on the scope as an investment bank, which we start to actually to serve in the financial services sector. This is our journey so far, and the company was founded in 1995 as Standard Stocks, on 7th February 1995 as a stockbroker, and the first office was at Riani House at Konanga Street. We started with only 5 employees. In the year 2003, SIB became licensed as a full investment bank and moved to Hazina Towers on Tari Lane, and you can see our logo then, and until recently. In 2008, and we all know what happened during the year 2008, the global economic recession happened. And that's where investment banking becomes very crucial. And you can see we got these awards, Best Investment Bank, by Think Business Awards, Best Performing Stockbroker, Think Business once again. And that same year, we moved to the current location, ICA building, now JQuat Towers, on 16th floor. In 2016, bank underwrote the largest transaction by advising KenGen, or Kenya Electricity Generating Company, on a 28 billion rights issue. Yeah. So in 2018, and for the same reason as well, we're having this kind of conversation today, SIB became the first online forex money manager by Capital Markets Authority and the CMA Online Forex Trading Regulations of 2017. And we trade as Mansa X, which is a global multi-asset strategy fund, and you'll be taken through the particulars of the same. So in 2019, the first year of inception, the fund managed a return of 24%. This actually is considered as an alpha return, an alpha of positive 10 if we take the average market return of maybe 14% if we are very fair. Right now, I'm sure it's well off based on what is happening due to the global pandemic. So these are a few highlights about the achievement and what the company has been able to transact. Over 200 billion transactional background, over 60 successfully closed project transactions, and these include IPOs. IPOs are initial public offerings. For example, when a company wants to raise a cash, additional money, maybe for expansion and funds, maybe they want to expand regionally and all that kind of, they need to raise additional money. So what they do, they sell shares. And that initial offer is called an IPO, the initial public offering. And bonds issuance, for example, when the government wants to borrow money from the public, they don't call it a loan, they call it a bond. And private placements, again, in the OTC markets, advised on 25 billion public infrastructure bond offer for KenGen, again, and then 1 billion ABC Bank bonds. That's sort of a corporate bond. So rights issues, this basically these are seasoned equity offerings, involved 20 rights issues, including financial services, banking and insurance, aviation, utilities, and hospitality. So a wide coverage of the sectors of the economy, especially in Kenya. So involved in takeovers and mergers, basically mergers and acquisitions, like the recent acquisition of NBK by KCB. Talk about the listings, including Qual, Unilever, WPP Scan Group, Access Kenya, and Equity Bank. So business valuations, Kemokobil, quite a number. Employee share ownership programs, KCB, Qual, and Jamibora. Of course, restructuring advisory, Lab Trust, CPF. So the portfolio is quite wide, and this one actually underpins the important role an investment bank plays in an economy and even in running day-to-day running of the companies. So this is our team. This year we celebrated 25 years in business. 25 years in business, and the team basically is comprised of finance industry professionals working together towards the growth of the regional capital markets. This is our board of directors, chaired by James Wangunyo, the founder and the managing director of Standard Investment Bank. We have Job Kihumba, who is the executive director for corporate finance. Corporate finance is also involved in mergers, acquisitions, and other advisory. We have Donald Wangunyo, who is executive director for a subsidiary called he is the CEO of a subsidiary called Forefront, under SIB. We have Pauline Moi, who is executive director for finance. And we have Nahashon Mungai, who is with us in this webinar and will be taking us through Mansa X, who is the executive director for global markets. Nikhil Wangunyo is the executive director for strategy and operations. Eric Musau, a well-known research expert, heads our research business unit. Then we have George Akel, who is an independent director, mainly legal matters. So the investment solutions or banking and investment solutions offered by Standard Investment Bank. We have the equities division that trades in company stocks and derivatives. Actually, SIB was the first institution to execute the first derivatives futures trades in the market. That's in July in 2019. We have the fixed income division that trades in fixed income products for local and foreign institutional investors. Mainly, the primary focus is government bonds, corporate bonds, and treasury bills. These are interest-bearing assets. Corporate finance, our team works with Kenya's largest public and private institutions to inform their strategic growth, structure their balance sheets, raise capital, and restructure their enterprises. And this is a very critical role, especially considering how businesses have been hit by COVID-19. People have lost their jobs and everything. Therefore, our corporate finance division actually now deals with such issues, making sure that companies don't go under. Yeah, we are the guys who are preventing companies to go under receivership, because when we are involved in the advisory. So SIB research, of course, based on what we do, data and information and its accuracy is very critical. We undertake rigorous due diligence in order to provide insights and clarity of investment opportunities to investors. Our reports comprise evening, daily trading briefs, fixed income wraps, weekly equity market reports, monthly and quarterly reports to make sure our investors are well informed before making investment decisions. Now, the other division is the Global Markets Division. Our Global Markets Division offers investors access to global investment solutions through our flagship offering, Mansa X fund. Clients are able to gain exposure to positions in most of the world's currencies. Sorry. Most of the world currencies, precious metals. We have exposure to over 100 currency pairs that we mainly are trading. Precious metals, gold, silver, and palladium. Commodities, global stock indices, and carefully selected single stocks. For example, Zoom, Tesla, and all those other businesses that are supporting other businesses and the way of life during COVID-19. I have to rush through that and take you through that brief. This webinar is being recorded and you'll be able to share it with you after this session. Allow me to usher in Nahashon Mungai, our Executive Director for Global Markets, to take us through Mansa X and learn ways you could use this investment tool to diversify your current investment portfolio. What we've seen happen in the local asset classes, they have basically underperformed, and any prudent investor would want to look at how has my portfolio performed the last 5 years, and then project into the next 5 years and ask yourself whether you're going to meet your investment objectives based on the current returns that you're gaining right now. So it's very important to be able to understand those dynamics and take advantage of the technological advancements and the information age that we are living in, so that, because you're so social and all that kind of stuff, also become tech savvy when it comes to investments and become smart when you invest. So allow me to welcome Nahashon. Nahashon, please take it up and take us through the next session. Thank you so much.
Oh, thank you, Victor. Thank you for that introduction, and thank you to everyone for joining us this afternoon to see how we can learn how to diversify our investments in global markets with our fund Mansa X. As Victor just explained to you, Mansa X is one of the products of SIB, which is regulated by the Capital Markets Authority, and we are licensed to provide investors with exposure to global markets. So my name is Nahashon Mungai. I'm the Executive Director for Global Markets here at Standard Investment Bank. So what is Mansa X? Mansa X is a global multi-asset strategy fund with a long-short trading model that invests in global online foreign exchange markets with the primary objective of capital growth for its investors. And as I alluded to earlier, SIB is the first online forex trading money manager that was licensed by the CMA to engage in this business on behalf of investors. And this is based on the CMA online forex regulations of 2017. So what are the asset classes that we give our clients exposure to? So the asset classes that we trade, we categorize them in six groups. The first one being currencies. So we're able to trade and give our clients exposure to all the world's major currencies, at least most of them. And we also trade in precious metals like gold, silver, platinum, and palladium. And later on, I'll explain why this is important. We also trade in commodities like natural gas, oil, coffee, corn, and this is also very unique to the fund. Additionally, we have a way of helping our investors to find exposure in global stock indices. So if you're looking for exposure in the S&P 500, the FTSE 100, the French CAC 40, all those global stock indices, which means you're really just tracking the stock markets of these various countries, we are able to give you exposure to that without you having to have the knowledge in how that actually works. So you invest in our fund, and then we will do this on your behalf, including global single stocks. So a lot of Kenyans will invest in, or rather have exposure to companies like Netflix, Tesla, Zoom. They know about them, but do they actually own a piece of that action, or do they even know how they can do it? Most likely not. And we at Mansa X are able to do this on your behalf. Then the last and also very important category of assets that we trade are cash and cash equivalents. So why did SIB decide to start this fund? This is a journey that has taken us over 4 years to actually get to where we are. Initially, it was just a concept, and the concept came out of an observation as the management of SIB that investors over time had become very fatigued, exhausted by the fact that there are very few investment opportunities locally, and whenever markets locally turned, or if they stagnated, then investors had no other place to invest their money and would be helplessly watching as, for example, the Nairobi Stock Exchange maybe went into a bear run for 5 years. They'll be helplessly watching that. And as an investment bank, a lot of our clients kept asking us, why can't you create a product that will give us exposure or give us action no matter what is happening locally? And they asked us, why can't you create something that's more international in terms of the approach that we use? And that is how we created Mansa X. That's actually the basis for it. And if you look at the traditional investment assets that investors in Kenya have been used to, it's primarily just investing in the Nairobi Stock Exchange and maybe government securities. And even there, it's a bit difficult if you don't have a sizable investment amount, or maybe just trading in or investing in real estate. And this meant that the investment universe for local investors was very limited. And Mansa X is here to help to change that narrative locally. So what are the features of the fund? Before I get into other details, I can just explain that we have a 0% initial fee, but there's a 5% annual management fee. And just to be clear, this is not charged upfront. It's prorated over 365 days, essentially meaning every day you pay a fee of 5% divided by 365. The minimum investment amount is 250,000 shillings with a minimum top-up amount of 100,000 shillings. Now, I know this is an important one for a lot of Kenyans. We've had a lot of Kenyans coming to ask us whether we are planning to reduce this amount. And the answer to this is that yes, we are. A big reason why the amount was at 250,000 shillings was really an administrative reason, not because it's hard to access these markets with lesser amounts. Because how the fund works is that even with lesser amounts, you could still trade those assets. But administratively, it was becoming very tedious for the investment bank to manage investments below this. However, we've recently come up with we've recently automated our trading models and our onboarding process. So very soon we'll be happy to announce a product that will be able to give you the same exposure as Mansa X, but will allow you to also have a lesser investment amount. The other fee that we charge is a performance fee, which is 10% of the return that we give you above 25% return. So for example, if we return 30% return to our investors, then we charge them 10% of that 5%, which is above the 25% return. I'm sure you'll agree that 25% hurdle rate is actually very high compared to what you've seen in terms of investments returning both locally and globally. So how have we returned? What kind of returns have we given our investors this year? For the first half of this year, we've done an annualized return of 20.6%. And I'd say it's been a fairly a difficult year because of, I mean, other than just how markets have been difficult to predict, it's also been fairly lackluster because of the lockdowns in most global trading centers, from New York to London, due to the COVID-19 pandemic. And the fact that the fund could still return 20.6% proves that this model of investing in a fully diversified portfolio actually works and helps to give a higher than average return. So what are the fund benefits? The first one is diversification. So other than just looking at the return that we offer, because there's always a very big fixation on returns. And it's always important to ask yourself, what's the downside of any investment that I make? If something did not work out as expected, what chances are there that I'd lose my money? So one of the biggest chances that you'd lose your money is if you're not well diversified. In fact, today we released a video, and I'm sure most of you will receive it, that was explaining the importance of diversification in anybody's portfolio. And this is one of the biggest advantages of Mansa X. It might be very difficult for you as an individual to actually create an optimum diversification, an optimum diversified portfolio on your own, without incurring a lot of transactional fees and even just the time required to create such a portfolio. If you invest in Mansa X, we are essentially doing this on your behalf. We are finding assets from currencies to metals to equities to fixed income assets, and then combining this in an optimal way and changing this as the circumstances also change on your behalf. And this is one of the biggest advantages of Mansa X. Another advantage is that we operate in a 24-hour market. And this is important because it means that it allows you to essentially have a fund that's very liquid. There's no chance that we are unable to get out of a position simply because this particular market has closed. Therefore, we cannot trade it because we have to wait until the next day and so on. We're able to trade in a smooth continuum of time. So 24 hours, 5 days in a week. We also invest in dollar-denominated assets, actually foreign currency denominated assets. And this intrinsically is very useful for any investor. So Mansa is a Kenya shilling denominated fund, just to be clear. However, within the fund, due to some of the investments that we make in dollar-denominated assets, euro-denominated assets, and so on, intrinsically, you find yourself hedged against the inevitable depreciation of the shilling over time. So if you look at how the shilling has traded this year, for example, it's lost about 6% of its value year to date. And if you therefore are in some investments that were foreign currency denominated, particularly in the dollar, then you'd have been intrinsically earning a return just by doing nothing, even if that particular investment did not return anything. And that's a big advantage for our investors. Another advantage that we have is we are licensed by the Capital Markets Authority to employ the use of leverage in trading, which means that we can actually employ, or rather we can actually access more funds, or rather more exposure in any asset class than the capital available to us. Okay, this means that if I'm investing, say, a million shillings of an investor, and I want to get a 10 million shilling exposure in a gold contract. I can actually do that with the systems that are available to us. And this is very unique to Mansa X, and very unique in terms of how fund managers have traded before in this country. But it's something that's very common with Western fund managers, but it's something that we are now only starting to employ in the use of investing for local investors. Another benefit of the fund, and this is a very important one. So other than just having a very diversified portfolio and a wide universe of assets that we can trade, we have a very unique ability to actually trade whether the markets are moving up or they are losing value. All right. So typically, most fund managers, if an investor if an investment is actually losing value, then they will actually make a loss. But for us, if a market, say a particular asset class is depreciating in price, we are still able to make a return by doing something called shorting markets. So as an example, you saw about 2 months ago, there was a major crash in the price of oil all around the world. And mostly if you're a Kenyan investor, you look on helplessly as something like that happens. But within Mansa X, say you had invested in Mansa X, one of our biggest opportunities in the first quarter came from the depreciation in the price of oil, where we went short oil prices. And that is one of the few things that we can do that enhances the returns that we give to our investors. Then another very major benefit is liquidity. So it's very important as an investor to watch out for any investment. And one of the things you should always ask yourself is, one, what kind of return does this investment give you? Okay, that's important. Everybody understands that. And unfortunately, for a lot of investors, that's where the story ends. Nobody asks any other question. So if you're told that if you buy land in Syokimau, you will double your money in 2 years. You don't ask anything else. You just ask, okay, where do I wire the bank? Just confirm that the title deed is okay. I'm done. I want to invest in land in Syokimau. You don't ask any other questions. But that shouldn't be the last thing that you ask. So return is just one thing. The second thing you should ask is, am I well diversified? Is this investment well diversified? If one asset class went wrong in that portfolio, would I be completely ruined or will I still be fine? Okay, so that's the second thing. Check on diversification. Then the third thing that you should check, and now this is what we're going to focus on here, is liquidity. So the ability to access your funds at any time, especially if you can access those said funds without any penalties or additional fees. That's a very important thing in terms of how you evaluate any investment. So just going back to my example earlier. So yes, probably whoever told you you can buy land in Syokimau and you can double your return in 2 years was probably right. But in between that period, or even just maybe 6 months later, you happen to have a medical emergency, or one of your family members has a medical emergency. How difficult is it to try and sell that property quickly enough to take care of the emergency that's facing you? I'm sure it's very difficult, and I'm sure a lot of our viewers this afternoon have gone through something like this, where you're trying to access funds from the traditional asset classes that you have invested into, and you suddenly find yourself in a situation where you can't actually do it, and now you're forced to borrow, you're forced to do harambes and so on, yet you're well invested. And that is why liquidity is a very important factor. So we at Mansa X, if you needed to access your funds, we have a lock-in period of 6 months, meaning that we encourage our investors not to withdraw their funds earlier than 6 months for obvious reasons. Investments tend to go up and down, but over time they smoothen out. However, we actually do not have any withdrawal or penalty fees on redemption of funds. And if, say, you came today and said, oh, I want to withdraw my funds today, you will be able to receive your funds within a turnaround time of about 48 hours maximum. The issue around withdrawal is actually based on banks. Who's your banker and how quickly do they act? But for us, we act immediately. The last fund benefit that I wanted to highlight is the fact that we have a local presence. We are based in Nairobi. We are here at Jekwa Towers, formerly ICA building. We are on the 16th floor. Why is this important? Most of the investments that we make, they've been available to investors even before Mansa was launched. But typically you'd have had to invest in funds that were based in Europe, based in offshore sites like Malta and Jersey. And if anything happened to your investment, not only did you not have any recourse, because CMA does not regulate those entities because they're not local, you also do not know where their offices are. If they refuse to pick up your calls when you needed to make a withdrawal, there's absolutely nothing you'd have done. You can't suddenly go to Malta Islands and start looking for a certain hedge fund that took your money. And that's a very big advantage that we've done here. So we've created a fund that's global in nature, but with a local presence. And that allows our investors to have comfort in just knowing that you can walk here, not only just to, in terms of complaints, but even just to learn what we do. Or maybe you just want to get comfort around, how the markets work, or you have some queries that you need to be satisfied on. You can always come to our offices. So that's also one of the advantages of Mansa X. So a lot of investors are concerned about the fact that our returns seem higher than traditional fund managers, and therefore one of the questions that we've always been asked is whether we then take on a disproportionate amount of risk. Do you invest in asset classes that are highly volatile, and that's the only way that you're able to make the return? No. So one of the things I want to emphasize here is the returns that we make are also due to back to the fund benefits I had highlighted. One of the things is the fact that, number one, you're investing in a lot more asset classes. Okay, it's very difficult to expect the same return from an investor who only invests in about 10 financial instruments at most, versus Mansa that can invest. Doesn't mean that we necessarily do this, but we have the ability to view and access hundreds of asset classes. Okay, if the Kenyan stock market is not doing well, we can take positions in stocks in the New York Stock Exchange. The S&P 500 alone is 500 stocks, as you well know, and so on and so forth. And this is one of the biggest advantages that makes us have a higher return, not because we are taking on more risk, but we have a very robust risk management framework at SIB, and SIB has been in existence for 25 years. We were founded in 1995, so we are actually celebrating our 25-year anniversary. Why do I say this, and why is this important? This is important because we are not trying to dent our reputation that we have built over time. Therefore, because of this, risk management within Mansa is very important, and we like to think of ourselves, I like to think of myself as a risk manager here at SIB, not just the portfolio manager. So we have a couple of limits. Limits means the maximum amount of exposure that we subject the fund to. So we have limits, and all these are automated, meaning that if the fund takes, unfortunately, maybe we take a loss that reaches a certain amount, we, by our internal policies and the systems that we have set, we are actually able to close out those positions, most of the times automatically. We as SIB were the first and still remain the biggest client within the fund. So one of the things you should know is that you're also dealing with managers who have also put their own skin in the game. We are fully regulated and by the Capital Markets Authority. Actually, in this particular line of business that we are in, and in the particular asset classes that we sell and manage on behalf of the public, we are the only ones that have this license. Additionally, within the fund, we have taken a lot of care to hire what we consider the best people in the business. Most of our traders have more than 5 years trading experience, not trading on the streets, as we like to call it here, but trading in banking institutions. There's a reason why we find this important, because if you have traded, especially for banks, then you have an inbuilt respect for risk, and you have an inbuilt respect for the importance of conservativeness in your trading. And those are the kind of traders that we have hired here at Mansa X. We have invested in very robust risk management software, and this allows us to manage our risk in using actual data. So we are data driven in how we manage our risk. And on top of that, we have a very robust fund management software, which means that on top of managing the risk on a real-time basis, we also ensure accurate reporting of returns to investors. And on this fund management software, this is one of the things that I would say we're very proud of, because we really worked very hard to create a fund management system that was very different from what has been used locally by other fund managers, due to the asset classes that we trade and the manner in which we trade them, and the manner in which we also value them from time to time. We're also very strict in MansaX in terms of how we trade limits for our traders, meaning that we have what you call exposure limits, meaning at any one time, there's only so much the fund can be exposed to. So if I'm here and I'm having this conversation with you and I'm having a webinar, I know exactly how much Mansa X is exposed to right now as I'm speaking to you. I know exactly the amount of loss I could take if everything went wrong behind me in the dealing room. And that's important for you as an investor to know that at any one time, this is something that we consider. We don't just get into positions without limits as to how we protect your downside. So we like to say that if you take care of the downside, the upside will take care of itself. That's a very big philosophy, and remains the overwhelming philosophy here in SIB, particularly in the Mansa X fund. Additionally, we have limits as to how we take our profits. We do daily reconciliations, real-time monitoring, and we have independent functions that do this as well. And then on our trading methodology, again, is aligned to our risk management approach, meaning that at any one time, there's only so much we can draw down. Draw down means there's only so much risk that we will take and allow to be running, no matter, even if it's unrealized loss. There's a maximum amount that we can let to be running at any one time, which is what we call a maximum drawdown amount. Additionally, we are very transparent. Investors receive their statements quarterly, and this allows them to flag if they feel that the return is not sufficient or it's not satisfactory, they can be able to flag it quickly enough, all right? And we will inform the client if the fund fell by more than 25% of the value of the fund. And to be honest, that would have to be a really big drop. Even internally, our policies are much stricter than that. So this is how we've performed over time, just compared to other investments. So this is last year. Last year, we gave a return of 24%. So we're just comparing with what the interest rates were last year in most risk-free asset classes. It's usually difficult for us to compare with other asset classes because the nature of our trading is different, but we felt that this can help you have an idea. So your 10-year bond will probably return about 12%, yet our fund was able to return 24%. We feel that additional premium that you've earned of 12% more than justifies the extra risk that you're taking by investing in a fund like ours. So this year, we have returned 20.6% in the first half of the year, and that is our fact sheet. As you can see, we report quarterly. So this is our return from inception to date, from the time we started reporting on a quarterly basis, which was in the first quarter of 2019. As you can see, the returns go up and down, because a lot of Kenyans will ask me, can you guarantee the returns of your fund? Can we have a guaranteed return? And it's a very difficult thing for me to answer because we do everything we can to protect our investor funds. We try everything we can to prevent any dent or a downside in the capital of our investors. All right. But again, we trade in real markets, and we do not want to give the perception that we will always, we'll always give you a particular type of return. The only thing we can tell you is over time, historically, we have been able to give what you're seeing right there on your screen, which are returns that has, like the first quarter of 2019, the returns were very high at 36%. Then we've had quarter 2 2019 having as low as 14%. This year, for example, we started off with a high return of 24.45, almost 24.5. The second quarter, due to obvious reasons from COVID to global tensions, we had a lower return. Okay, we expect quarter 3 most likely will give you a higher return, and this is a sort of experience that our investors will experience in Mansa X. However, it's a much more honest representation of how markets work. It's a much more honest representation of how markets work, as well as a representation of the fact that we also protect the downside, because as you can see, we've not had any negative quarter since inception. So what are the insights for the first half of the year? Of course, for the first quarter, we had some interesting movements that made the quarter so much more interesting, like the oil crash that I mentioned earlier, dropping global stock indices just when the COVID-19 pandemic broke out. That was actually, interestingly, a way for us to capitalize on returns there. But then the second quarter of 2020, I'd say, had a lower return, again, because the lockdown in most global trading centers meant that volatility in most markets actually died out. Okay, this is actually not a good thing for us. So as investors in Mansa X, you should actually be, whenever you see a lot of volatility in markets, you should probably be expecting a much higher return from us. And this is manifested, as you can see on the returns on your screen. So that is it from me. As I had mentioned earlier, that is where we are located, JQuat Towers, 16th floor, Kenyatta Avenue. And our numbers are also there on the screen. Please reach out to us to open an account, ask us any question. If you want to come and see a relationship manager, we have several relationship managers and financial advisors who can take you through this investment and answer any questions, especially what you feel I have explained today and you need, you have some queries around that. We will always be available to help you with that. Thank you very much.
Thank you, Nash. Thank you, Nash, for that insightful run through Mansa X. We have a number of questions that have come through. I'll read them out to you, Nash, as you answer them. Tobin, a bit of issues at the beginning, but he eventually got sorted, and he also helped the other participants to actually connect the audio. Thank you so much, Tom, for that input. So the first question was, someone said, I noticed a 99% gender imbalance on your board of directors. How do you intend to drive SDG number 5? SDG number 5, at that in terms of gender balance? That's Salome or Wall.
Okay.
Nash?
All right, so okay, that's an interesting question, and you know, it's a legitimate observation. How do we plan to create a better balance in our management team? I'll say that is probably more represented on the board than the actual investment bank that we run. If you come here, you'll find that gender balance, I think, is almost 60-40. However, with time, we will definitely align the board to a much more balanced a representation from a gender perspective. Thank you for that observation.
Thank you, Nash and Salome. Thank you for that observation. Much appreciate. How can Sarang Butta asking, how can I get access to investor information? Is there a daily e-newsletter?
Yeah, so we do a lot of publications. In fact, if you read the Business Daily on Fridays, most of the times on the market section, which is usually on page 21, and sometimes on the back page, this is on the Friday publication, you'll find that we do a lot of articles explaining financial markets, global markets, giving an update of what's happening. Internally, for our own investors, we send the same kind of write-ups and market updates and financial research notes that we do internally, and we do a lot of this. We have a very strong research desk, and they constantly publish these opinions. So I guess what we can do after this webinar, I believe, Victor, we will be able to get the contacts for anybody who wants to be contacted, and it would be nice to know whether they're opening an account or they need research information, and then we can always provide that for them.
Thank you. We have a question from just a minute. I'm trying to do osmosis. Kevin Mulama, how do I track my investments? Do you have a mobile app? What is the frequency of your reporting to investors? That's Kevin Mulama.
All right, so we are in the process of creating a mobile application. If you remember, about 10 minutes into my presentation, I mentioned that we are creating a better and more automated method of onboarding investors. So a mobile application is one of the things that's part of that process, and we are the tail end of creating this. Our frequency of reporting to investors is quarterly. So if you open an investment with us, you will receive updates quarterly on how your fund is performing.
Great, thank you. Sebastian is asking, what was the lowest ROI over the years of existence? Any reasons you posted depressed returns for that year? And finally, what is the projection for the next 5 years?
Wow. I mean, first of all, the fund, we only got our license at the tail end of 2018. So we've only had one complete year, 2019, in our second year of operations. That's for Mansa X, all right? And during that period, we have returned a return, as high as 24%. But when I'm asked about the ROI, it then becomes difficult to understand whether you mean the ROI for Mansa X fund or ROI for Standard Investment Bank. So as Standard Investment Bank, we have been in operation for 25 years, and based on the nature of how an investment bank operates, different desks will have different expected return. But over the next 5 years, I can speak for Mansa X, we expect that if we continue with the asset classes that we are trading, and we continue with accessing the financial markets, financial instruments that we are currently trading, and if we continue increasing the counterparties with whom we do business with, we expect that we will continue to deliver above average market returns for the next years and into the future. That's a comfort I've given an investor. And because we started this fund with just under 100 million under management, and now we are at about 1.5 billion. This is in a period of roughly 1 year, and we are still growing. So, and this allows us to create more economies of scale, more products that we can actually trade, and even safer ways of trading the products that we trade, which will continue enhancing the returns for investors.
Great, thank you. Tom is asking, what return do you project for the year? I suppose it's year 2020. What returns do you project for the year?
We project to match, we might match what we did last year. So far, that's what we're expecting. That's our expectation. Yeah.
So Z Jomoza is asking, lock-in period for funds, is there a minimum amount? Malik, can you mute? It's okay. Okay, Malik.
Yeah, so the minimum lock-in period is 6 months, and the minimum investment amount is 250,000 shillings.
Okay. So is it possible to get the item to itemize the 20.6 return for first half of 2020? That's Musa Buya.
Is it possible to itemize it?
To itemize the 20.6 return for first half of 2020.
Okay, so break it down into the assets that we actually traded and how they performed. Well, I can only give an indicator. Well, I'd say globally, we had outliers in performance like gold. Gold is one of the biggest movers. First half of this year, not even just the first quarter, where you've had the price of gold shoot up by about 30%. We are now trading at almost $2,000 an ounce. We've always touted in Mansa X, if anyone has been following the webinars before, that this is a really nice asset to own, and this has continued to outperform. The US stock market has also been an outlier in terms of helping us boost our returns. And then we've also had locally, we've had a lot of success with the returns from the fixed income market due to drop in interest rates. So I'd say those are the biggest outliers that we've had this year.
Yeah, thank you. So Kevin again is asking, what are some of the challenges you faced as a fund since inception?
Obviously, the biggest challenges of such a fund is, first of all, handling the expectations of investors, because you have investors who have been used to fund managers that promise guaranteed returns, okay, almost in a sense. But so investors are not used to having an almost hedge fund style of investing where, yes, we take your funds and we subject it to a little bit more risk, but this means that you might have varying returns, but a winning return above the average market return over the long haul. So that becomes very hard to explain to clients at the inception. But we find that our clients are now very comfortable with that. And of course, the second thing is automating the fund, preventing the amount of administrative tediousness that you have to go through in the fund, and allowing yourself to take a sit back and actually trade and not have to deal with administrative work, which we at least were able to solve at least within the first 8 months of the fund by investing heavily in IT infrastructure. And that was also very difficult for all of us. So we had to invest in very difficult, very complex softwares, while at the same time trading to give investors a return that we have promised. So those are some of the challenges. And of course, over time trying to continue trading in markets as they become complex sometimes with unexpected events. Like COVID-19 was completely unexpected. You would expect everything else except COVID-19. And that again changes even how you trade, how your traders access their markets, and how you manage the risks, not just now from a perspective of trading, but from a perspective of the human aspect of it and the people who trade, and how you manage how they come to work, how they trade, how they interact with each other, and so on.
Thank you, Nash. Out of Brian is asking, who incurs or bears the market risk exposures inherent in offshore investments?
Well, who bears the market risk exposures inherent in any investment? Any investment. I mean, offshore investments are not the only investments that bear inherent risks. So first, I'd want to clarify that question needs to be asked in terms of who bears the risk in investments in any fund. Obviously,
please mute your voice. Okay, proceed, Nash. Sorry.
Yeah, so obviously in any investment that there are risks involved in them. And when you bring your money to a fund like Mansa X, your expectation is that we are doing everything we can to professionally manage your funds. That's your expectation, and that's what we do for you. That's what we can guarantee you that we do. So everybody bears this risk. We bear the risk, you bear the risk, but obviously you're the one who has invested the funds, right? So essentially the risk then becomes yours. But as Mansa X, we take it upon ourselves to minimize this risk or completely eliminate it through our trading systems and how we actually manage the fund.
Fair enough. Sebastian, if I'm targeting precious metals investment with high unit value, would the minimum investment amount of 250,000 still cut it?
All right, so absolutely. I mean, that's the advantage of Mansa X, because you invest in a fund like ours with 250,000 shillings, and we give you exposure to gold. If maybe you are trying to invest in gold out there, even just storing it, you'd need hundreds of times that amount that you're talking about. So those are some of the advantages we at Mansa X help you to have. So you can walk around seeing the price of gold is going up, and you can tell your friends, yes, I have exposure in gold because I invested in Mansa X.
Yeah, thank you, Nash. I think his angle is whether he can choose to invest in precious metals inside Mansa X, which maybe
like invest in nothing else except precious metals. Okay, so unfortunately we don't allow discretionary investments. We make all the investment decisions on your behalf. So you cannot come to Mansa X and tell us, please, for my funds, just buy gold and nothing else. Eventually we will create a product like that, but at the moment, no. So we can give you exposure to it, maybe, but we won't necessarily allow you to actually make take that position on your own.
Okay, thank you. Zijo Moza is asking, what is the minimum loss ratio, expected percentage? How much loss can I get hit on my funds invested per annum?
Well,
minimum loss ratio.
We like to align it with what the CMA has at 10%. Okay. If you see how the stock market works in Kenya as well, if a stock loses more than 10%, they will halt trading. So even for us, we align it with that figure in mind, that we would not want to lose more than 10% of our investors' funds.
Thank you, Nash. Musa,
and this is automated. Just to be clear, we automate these processes. So when I say we do not intend to lose more than this amount, we have actually automated it, meaning that this is then sliced into timelines. Meaning, for example, we will not expose 10% in one day, for example, or 10% in 1 week. It will be sliced up into smaller percentages that then are limited per moment of trading or per period of trading.
Great, thank you. We have a question. Is the annual management fee of 5% paid at the point of investment or at the point of cashing in on the investment? And what value are we using if it is at the time of cashing in?
Yeah, so our AUM fee, the 5%, is neither charged at the beginning nor at the end. It is actually charged daily, right? So not 5% every day, but 5% divided by 365. So that's what you pay every day. So it's a little percentage of the AUM, which is what the funds that you've invested on a daily basis. So at the time of withdrawing your funds, it has already been factored into your return. So whatever you receive in your statement on a quarterly basis factors your management fee as well.
Thank you, Nash. Robert Modigani is asking, when you leverage trading capital, do you borrow from other sources to, I can complete the sentence, to trade on that?
Yeah, that's correct, yeah. Leveraging requires borrowing, and we have liquidity providers. So liquidity providers are international banks that we use to finance the leveraging of our trades. So that's correct, yeah, we borrow. So the return that you see is net of the borrowing costs required to invest in the markets that we trade.
Thank you, Nash. We have a question from Nokia 2.2. I suppose it's not a bot. What's the minimum amount you can be? Yeah, you can be the seed capital for the investment. Okay, what's the minimum investment amount? Do you have forums where investors are being nurtured and mentored, especially the new ones?
Yeah, absolutely. The minimum amount is 250,000 shillings. And do we have forums where investors are being nurtured? I think, Victor, you should answer that.
Yeah, I'm just, yeah, even when right now.
That sounds like it's directed at you.
Yeah, it's a free webinar we are forming. This is part of our thought leadership to enable you, the Kenyan investor, learn more about investments, and even the new investors can be able to learn and not just focus on traditional investments that are typically underperformed, but they play their crucial role based on your investment objectives and the investment horizons that you're looking at. So if you go to our website, there's a section for insights where we share insights and market updates, and you'll be seeing a lot of investment advisory articles written by our internal team to guide you and be able to make informed decisions. So the rule of the thumb is when you come across investment advice, you do your own research also and look at your investment objectives and ask yourself, is my investment objective aligned with this kind of investment solution that I'm getting? You know, so thank you from Nokia 2.2. I'm interested to know this person in person. So right. Musa is asking about Islamic Sharia compliant products and whether they can dictate what products to invest in. I think we answered this question on this is a discretionary fund. We invest on behalf of the investor, and therefore you cannot come and say, no, I want gold, no, I only want oil. Yeah, because there's a collective investment scheme, and it follows a particular investment strategy for us to be able to realize the kind of returns that the fund has been able to get. So on Islamic Sharia compliant, Nash, maybe you can.
We are creating a Sharia product, but we haven't created that yet, or rather we haven't finished yet. So we just ask for some time on this.
Thank you.
And so it's something that a lot of investors have asked us actually. It's because I think since we published our first year results, a lot of investors from the Muslim community have asked whether, you know, they can get a Sharia version of Mansa X, and we are taking this very seriously. So we are in consultations with advisors to create this product for them.
Thank you, Nash. George Wangindu is asking, I have a couple of, okay, what's your price target and hedge position for gold? What's the dollar outlook going into 2021?
What's our price target for gold? We actually targeting $3,000, but we are trailing our positions. What is the next question?
The dollar outlook going into 2021. Dollar outlook.
Well, that's a good question. I mean, obviously, one of the things that right now can affect the value of the dollar is the geopolitical tensions. Okay, this will continue to be an issue. All right, and I'm particularly referring to right now we have some serious trade wars between the US and China. Okay, this can affect the value of the dollar because then you have central banks having to work overtime to deal with the political risks that have been induced on them by what's happening between Washington and Beijing. So this will continue to weigh on the dollar. Just today we have the Federal Reserve committee meeting this evening, and one of the things that we expect is that they'll continue slashing interest rates or continue printing dollars in the market. Now the US can get away with printing dollars because of their military might and where they sit, but you can only print so much without actually devaluing the value of whatever asset it is that you're increasing the supply of. Just this year alone, we've seen the increase in money supply for the dollar. The money supply for the dollar is as high as 30%. That's huge. It's unprecedented. It's actually never happened. So that just tells you that with time, obviously, for 20 to 2021, we expect that there'll be pressure on the dollar. Yeah.
George is asking, with the vibrant IPO environment in China, are you taking any positions there, and what's the expected impact of US-China spat on market performance across various asset classes? That's George Wangendo.
So are we taking positions in the Chinese stock market? No, not at the moment. So we find that the Chinese market can be very exciting, yes, but there are also some challenges around capital controls and how you can actually trade the kind of derivatives that we use to get into single stock positions. So at the moment, we are not trading the Chinese market. And then some of those stocks actually exceed the volatility limits that we have internally, because the Chinese stock market tends to be extremely speculative.
Thank you. Musa is asking, managing to investment and make a good return calls for either luck or very good market analysis skills. What is the difference between your ability now and your ability when we lost money at the NSE after using you as our agent?
Okay, so I think if you lost money at the NSE versus losing money in Mansa, it's a bit different, because losing money at the NSE means that you took a position in a particular stock, you bought a stock, you made a decision to buy Safaricom, for example, you made a decision to buy Mumias, and you held it for some time and it traded against you. Now in Mansa X, and that is why I really emphasized on the issue of diversification. That reduces the impact of your portfolio performance on luck. So if you have bad luck, so to say, in one of 3 assets, then it's more than compensated by the other assets which you are right about. That's a bit of a difference there. So that, I'm not saying we completely eliminate luck from the equation. Luck is part of it. That is why you have to take a very conscious decision to prevent the maximum loss that you can take. So if something goes against you, we don't sit back and say, no, we are 100% sure about our decisions and we are not going to close out our losses. No, because sometimes you could be wrong, and markets can turn against you even when it's not clear why they have turned against you. So yes, luck is part of it, and that is why we protect you by the risk management framework that we have implemented locally. And comparing an investment in Mansa X and the stock market might be a bit like comparing apples and oranges, because when you're talking about the NSE, you're only talking about a particular performance in a particular company. While us here, we are talking about a whole portfolio of assets. So that's the difference.
Nash a bit. Nash, can you hear me?
Yes, I can hear you.
Yeah, we lost you a bit. I don't know if it's this side or everybody's experiencing that.
Oh, okay.
Sorry about that.
So you can hear me now?
So we've a number of questions that have come in. Like I can see there are 31 questions that are yet, and then work on a Q&A based on all these questions that have been asked with our team internally here, and we'll answer. We'll send that on all your emails, and you'll be able to follow through alongside the webinar. We'll develop a Q&A based on all these questions that have been asked, because due to the interest of time again, most of the questions I can see they are repetition of what was answered up there. Just scrolling randomly to see if there's any that actually captures what might not have been answered. Maybe we can take these 3 more questions. For those of us in retail FX trading, but want to get into institutional trading, what's the best route to take? Nash? Nash, can you hear me? Oh, you're muted. So, hi everyone. So what you're going to do, we will work on a Q&A. Our team will be able to share that in the meantime. And we'll be able to answer all those questions that you have been asked here there are so many. If you are checking our chat, you can see quite a number of questions. Maybe the question about QTD this year was answered. Maybe Nash, maybe one last question, then we close it up. What is the worst case scenario in the global markets with the prevailing pandemic situation, and how has the fund cushioned against itself against such? Maybe you can take that.
Okay, so a lot of our investments in global assets are done using a leveraged platform, meaning that, as I said earlier, we'll use a small amount of capital to gain exposure of a much larger amount. So how we have cushioned ourselves against a crash or a wipeout of the global financial system is keeping a very big portion of our fund in cash and cash equivalents. I actually see whether someone asked whether we hold fixed income positions in the fund. Actually, we do. And that's also another way we cushion our investors. And this is how, if you hear that, there's a very major recession that has happened globally, or there's a crash in markets globally, you don't have to worry because of the way we have structured the portfolio. Additionally, the ability for us to trade short markets means that if the pandemic continues and without seeing a retracement in the value of the stock markets globally or the prices of other assets globally, including commodities, then we are able to still make a return for our investors by taking short positions. In a sense, meaning you can actually find yourself actually even making a return, even whether there's a crisis or not. And this is why our fund, in a sense, you can categorize it almost like a hedge fund. We hedge the downside by taking alternative short positions to the long positions that we hold, and that's how we protect our investors.
Thank you, Nash. Please take this one last one. Grace is saying, please answer this one. With Mansa X average, let's say 20%, if you less management fee of 5%, then you are left with a net return of 15%. Does that return a good trade-off for such high level of risk, considering infrastructure board gives 12% tax-free?
Okay, that's
a good question.
That's a very good question. I mean, yes, the infrastructure bond right now, or rather right now, is not giving you 12%. First of all, the most recent infrastructure bond is at 10.9%, and we expect that interest rates in Kenya will continue dropping significantly. There's a lot of liquidity in the markets. So the highest returning bond that I expect you'll be seeing in the next 6 months or so, even for longer tenors, will be about 10%. So interest rates will continue to drop both locally and internationally as we continue to go through a crisis, and therefore central banks will have to keep interest rates low just to stimulate economies. So we think at Mansa we'll continue to give you a better return and a better trade-off on your funds. Right now, if you compare us, yes, with a 12% tax-free return, you could argue that yes, the premium is not that much, but compounded over time, a premium of even just 3 to 5% is still very significant over a long-term period of time. If you're investing over, say, about 5 years, even if you got an extra 3 to 5% over time, it's very significant. It's only that we're in an economy where people are used to large percentages, so they feel like 3% is not really useful, or 5%, and they also just look at the current situation versus what is coming or looming. If you look at T-bills, for example, last year one could argue that yes, your 1 year T-bill is at 10%. Now we are talking at about 8%. Okay, and that is just a few months, and this trend is expected to continue. So we still believe that Mansa X, in spite of our fees, still delivers a better alpha for investors.
Okay, thank you so much, Nahashon, for those insights. So yes, Amos will be able to share the presentation for those who joined late. Actually, this webinar is being recorded. We'll also be able to share the PowerPoint slide decks for you to be able to follow this presentation. Remember, we are going to run a very short poll at the end of this session. Please take that quick poll. It's less than a minute. There is one burning one about taxation of returns. Nash, please answer this before you exit.
All right, so when it comes to Mansa X, it's categorized as a capital markets product. So based on this, there's no capital gains tax on capital markets products. So that means essentially, unless advised otherwise by your tax advisor, we actually don't have tax charged on the returns on Mansa X. But please declare the returns that you earn from Mansa X in your KRA returns.
Yeah, thank you so much, Nash, for your time. Good evening, everybody. We are so grateful. On your screen, you see a webinar call in progress.
Thank you.
Please take your time and give us some feedback to enable us give you more value, punch more value into our future engagements as we continue with our thought leadership in terms of educating the general public for you to learn and be able to make informed decisions. Thank you so much for joining us. Until next time, bye-bye.
Okay, thank you, Victor, and thank you, everyone. Thank you for joining us.